Hello, and welcome to another update video about Bitcoin. So we take a look at the daily chart. We'll see how Bitcoin is behaving today. The overall situation on the daily chart hasn't changed. We have one noteworthy development here on the daily chart, though, which is that the price is breaking out of our wedge pattern to the downside. This is going to be something that we should be watching today, given that this is quite a huge candle, quite an engulfing red candle that is developing there, and is sending the price to the downside of this wedge pattern. These patterns tend to break to the downside. The price has, however, not reached the next trend line above to test it, so has decided to break to the downside more directly. This opens the door to a top already being in potentially, but for the microstructure, we have to watch the micro chart, the micro count, the shorter time frame. So we should do that and not spend so much time trying to discuss micro counts here on the daily chart. But I just wanted to take a moment on the daily chart to discuss the relevant parameters we are watching. First of all, I'm watching. I've left this red trend line, the solid red trend line on the chart, for the purpose that maybe we're going to retest it. Maybe we're going to retest it. So I left it on the chart. We are still aware of the Fibonacci support area between 69,144 and 75,341. So we should also keep an eye on that in case we get another low. These are levels that have been on the chart for months now, so definitely worth watching. Then what we can identify is, to the upside here. If the price continues to grind higher, we have a resistance area that is completely unchanged. $90,900 is the next key level to watch. And then we've got this other trend line here for a potential breakout. Overall, no change here. We're still holding above support. The move to the upside continues to be choppy, messy, and fragile. So communication is the same. We don't have any high confidence patterns. We don't have any impulses. We don't even have any 5-wave movements. Okay, so again, I try to make sure that it's clear that this is not a high confidence pattern. So it can break at any point. It's not broken yet, so we'll take a look at that. But it's not a high confidence pattern. I know some of you have sent me messages about, I should track this as a more aggressive impulse because the overlapping structure looks more like a 1-2-1-2-1-2 setup or something. It's just not that, okay? And that's just, proportions just didn't align. And that would have been super aggressively bullish, but I intentionally avoided that scenario. Let's take a quick look at the indicators. What is the RSI doing? Not so good. Don't like that. Okay, back below 50. Back below 50, we saw that upside breakout a few days ago. Back below 50 is not great. And but that's exactly why I told you yesterday, for me, structure is more important than the indicators. Yeah. So it's definitely, I use that as a signal. It's a warning. Together with a break below the trend line, it's a warning that we already have potentially a top in place. MACD is also starting to reduce further, also not great. But for further insight, let's take a look at the shorter time frame structure. And here you can see, no change to the wave count, essentially. The price is simply now reaching. Yesterday, the price hadn't reached the support area. Now we are in the support area. So we can watch today if the market generates any sort of response there. I have low confidence, I can tell you that. Not high confidence. This is not an impulse to the upside. There's no solid setup. And as I said before, we need 5 waves up before we really get a really solid setup. Of course, we can watch levels. Of course, we can track structure. But it is not so predictive until we really get 5 waves up. And the problem is that this is already, if this is an ABC structure as I'm tracking it, and I like the look of that count, doesn't make it a great structure though, but the proportions work out well. Well, then the C wave in wave A would be an ending diagonal and started likely down here on the 13th of March. And that allows for the wave 4 to be deep, standard support for a wave 4 in a diagonal, between the 61.8 retracement and the 38.2 retracement. So that's between 83,930 and 85,746. As I said, this would be standard support for a 4th wave. Yeah, and then from there, a 5th wave up could happen. This is what I'm watching for today, this support zone. Below that, we have some structural support around 83,213. What happens if we break below these levels? Well, at that point, I will assume that we don't get one more high, okay, and that the top is already in. But that opens the door to a lot of different interpretations. One of them being, for example, that this larger degree wave 4 that already bottomed in March, around the 11th of March, that this is still unfolding. But again, that's nothing new. We talked about that triangle pattern in the last few days. How would that work out? Because the move up is corrective, yeah, again, it can be part of a triangle, which is A wave, B wave, C wave. Could also get one more high, it would still be a C wave, D wave, E wave, down. Another scenario is, of course, that the A wave in white already topped, but then if the pullback is corrective, we can consider that together with the yellow D wave, and then we can watch for an impulsive reversal to the upside. But yeah, all of that, or do we go directly to a new low? And again, all of that will need to be assessed in real time when the chart breaks, because we need to see how does it break, what's the structure like. But I can tell you that if we break below 83,930 on a sustained basis, yeah, it would be a warning that not major top, a more substantial top has formed, and we're then going to watch for lower prices until the market breaks above some kind of resistance. Yeah. So for now, I'm not optimistic. I'm just watching this, just tracking the waves. I don't see this as a great setup. The price already broke upper micro support yesterday a couple of times. Since then, obviously, we talked about the changed wave count late yesterday. Even though nothing was invalidated, but yeah, it would be now. So it was good timing to change the count. But still, that doesn't make this one here a great structure, right? It rather has, hopefully, or it is hopefully indicating, that we need to be really on the side of caution here, because this is just an ABC structure. We even saw the price break below that trend line. So yeah, it is quite a big warning. For now, yeah, it continues to be, the market continues to be full of uncertainty, right? That's just what happens in these corrections. Different to, for example, if we were in an impulse, there would be less uncertainty. There's always some uncertainty in markets, but in a correction with overlapping structures, yeah, there's high uncertainty. So I'll keep you updated. Be ready for a bit of a roller coaster ride, and hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.